Resilient. That's how Standard Bank has described its performance in the first 5 months of its financial year. The group says headline earnings grew around 10% in rand terms during the period, and on a constant currency basis, headline earnings rose by the mid-teens. That's even as it faced market volatility as a result of U.S. trade policies and geopolitics. Looking ahead, Standard Bank believes it will deliver on full-year guidance. This will see banking revenue growth of mid to high single digits in rands, banking cost to income ratio being flat to down, and return on equity in the range of 17 to 20%. More detail on the firm's journey to achieve that will be revealed when it publishes its half-year results on the 14th of August. Libstar has posted a 10% rise in revenue during the first 5 months of the group's financial year. That's thanks to increased volumes and price mix changes, and comes despite consumers remaining under pressure. The consumer goods firm, whose brands include Lancewood and Denny Mushrooms, says it expects continued positive trading momentum for the rest of the year. Libstar will open its books and publish interim results on the 16th of September. Stadio says the construction of its Durbanville campus is on track and the site will be open for new students next year. The private education group has also announced that building phase 2 of the campus has been approved earlier than initially planned and is expected to be complete in August next year. The new Durbanville campus comes after the firm noted a surge in demand at its Bellville campus. Total spend for phase 1 and phase 2 is estimated to be 325 million rands and will increase capacity to more than 6,000 students. Shoprite has opened a new distribution center in Gauteng. The site can handle about 220 trucks on site at any given time and will supply more than 500 of the group's supermarkets in the province, which is the retailer's biggest market. Commenting on the move, Shoprite's Chief Supply Chain Officer, Andrew Havinga, added that the facility will also reduce transport costs and emissions as it will allow for shorter delivery routes. Brycor has suffered a major profit knock. The building and construction materials maker has reported a 61.5% plunge in annual headline earnings per share. That's as its brick segment faced a weak market due to a constrained construction sector. No dividend has been declared. In international news, Airbus secured more aircraft orders, raising its total to $21 billion at this week's subdued Paris Air Show, while rival Boeing opted not to announce new sales following last week's Air India 787 crash. Here's more detail in this report.
The Paris Air Show is usually a battle between Boeing and Airbus to see who can announce the most big deals. But this year the contest appears to be a bit one-sided. By Wednesday, Airbus had trumpeted a string of deals totaling $21 billion in all. Notable orders included one for up to 150 planes for Vietnamese budget airline Vietjet, and there could be more to come. Air Asia boss Tony Fernandez says he's in talks with Airbus over an order for up to 170 new jets, though he's also talking to Brazilian rival Embraer and cautioned an agreement probably wouldn't be ready to sign during the show. Meanwhile, it was a very different story over at the Boeing chalet. The US giant has opted to keep a low profile following last week's deadly crash involving one of its 787s operated by Air India. Chief Executive Kelly Ortberg subsequently cancelled plans to go to Paris, saying he wanted to focus on the crash investigation. The firm has also decided not to announce any orders during the show. Boeing had anyway sealed a string of huge deals during Donald Trump's recent tour of the Middle East, leaving it with less to reveal in Paris. Meanwhile, this week saw some hopeful signs for the industry as a whole, which has been plagued by shortages of parts and resulting delays in the delivery of new aircraft. Airbus said Wednesday it was now experiencing 40% fewer disruptions caused by delayed parts. That will raise hopes for airlines desperate to get their hands on new jets.
And Microsoft is reportedly ready to walk away from talks with OpenAI regarding their multi-billion-dollar partnership due to disagreements over key issues such as equity and control. Let's take a look for more detail.
Microsoft is prepared to abandon its high-stakes talks with OpenAI over the future of its multi-billion-dollar alliance. That's according to the Financial Times on Wednesday. It said the tech giant could pause negotiations if the two sides aren't able to agree on critical issues, citing people familiar with the matter. Sticking points reportedly include the size of Microsoft's future stake in the ChatGPT maker. The report says Microsoft plans to rely on its existing contract to access OpenAI's technology until 2030. The tech giant's multi-billion-dollar investments in OpenAI's technology have been key in positioning it as a leader in AI. And as its major backer, the AI startup requires Microsoft's approval to convert to a public benefit company. OpenAI believes that move will make it easier to raise capital. Earlier this week, the Wall Street Journal said executives at Sam Altman's firm have considered accusing Microsoft of anti-competitive behaviour over their partnership. Microsoft and OpenAI did not immediately respond to Reuters' requests for comment on the latest news.